as the left lead book running manager on this landmark transaction. Horizon Industrial Parks Limited is India's largest industrial and logistics infrastructure developer, owner and operator, with a total network area of 59 million square feet across 45 assets in 10 cities. As of May 31st, 2026, this network includes 29 million square feet of operating assets with a committed occupancy of 93.6%. That still leaves another 30 million square feet of developable potential for future organic growth to be built out over the next 4 to 5 years. Horizon has 3 core offerings: fulfillment centers for bulk storage, industrial facilities designed to support assembly and light manufacturing, and multi-use in-city centers. Horizon owns the largest in-city platform comprising 17 sites located across metros with a total network of 7 million square feet. It serves a diversified base of close to 120 customers across key sectors of the economy like the e-commerce, retail, FMCG, auto, EV, renewables and many more. Backed by the Blackstone Group, it continues to leverage the group's deep expertise and global experience in the logistics sector. We are extremely proud to support Horizon as it takes this important step towards becoming a publicly listed company. This IPO provides investors with a unique opportunity to participate in the first public listing of a pure-play warehousing, industrial and logistic infrastructure company on the Indian stock exchanges. Let me briefly share the key details of this offering. The IPO size is 2,600 crores, which is comprised entirely of a fresh primary issue. The price band for the IPO is set at Rs 57 to Rs 60 at upper band. The issue opens to the public on Monday, August 17, 2026 and will close on Wednesday, August 19, 2026. The anchor investor bid offer period shall be on Friday, August 14th, 2026. Shares are going to be listed on both the BSE and the NSE around Thursday, August 24th, 2026. We'd like to express our heartfelt appreciation for Team Blackstone and Team Horizon for giving us this opportunity to partner with them. Their vision, commitment and expertise is complemented by their deep relationships with MNCs and domestic entities across their diverse business operations, accelerating them to a path of continued growth and success in the industrial and logistics market. This IPO is the result of years of dedication and discipline, driven by a committed team that has scaled its portfolio while upholding the highest regulatory and quality standards. Lastly, I would also like to thank our syndicate partners, the investor community, and my colleagues across my ECM, legal and execution teams for their exceptional efforts in bringing this IPO to market. We look forward to a strong investor engagement and a very successful offering. Thank you so much.
Thank you, Nitin. Request Ashish Monta, Head of Real Estate, Blackstone India, to elaborate on Blackstone's strategy in India and for the logistics sector.
Good afternoon. Thank you for joining us as we kick off the investor roadshow for Horizon Industrial Parks. We're glad to be back just after about 3 months after completing the REIT IPO for about money. We are proud to introduce India's first pure-play industrial and logistics IPO with Horizon Industrial Parks, offering investors access to the country's leading logistics platform. This is an important milestone for Horizon, for Blackstone, and for the continued growth of Indian capital markets. India remains one of Blackstone's largest, highest conviction markets globally. We have been investing here for about 2 decades and continue to see compelling opportunities across sectors. We pioneered India's first REIT in 2019, followed by first retail REIT with Nexus, and are now proud to launch India's first pure-play industrial and logistics IPO. Globally, logistics has been a large play for us. Blackstone owns more than 1 billion square feet of logistics assets globally and has countless tenants that we hope to sort of bring to India. India remains highly underpenetrated, with the country's total logistics stock less than that of Chicago. When we saw this, and that compared with what we were seeing on the ground in terms of e-commerce growth, growth of industrial, the GST policies, and the government investment in infrastructure, gave us very strong confidence on the sector, and we really went all in after that. Over the course of the last 6 years, we have built Horizon grounds up, led by industry-leading management teams with end-to-end capabilities, and we have grown Horizon into India's largest industrial platform with 61 million square feet across 10 key consumption markets. We have focused on developing institutional-grade stock at scale with disciplined execution. Over the years, we have built relationships with more than 120 tenants, which continue to grow across high-growth sectors such as e-commerce, retail, automotive, electric vehicles, and logistics. We are launching a corporate IPO of Horizon in a sunrise sector with huge growth potential, as the IPO structure provides flexibility to redeploy earnings in the business and capture this underlying growth. In closing, I would say we believe the platform has strong foundations and a significant opportunity ahead as India's logistic market continues to grow and modernize. We are proud to offer investors an opportunity to participate in this IPO, also in India's consumption in manufacturing megatrends through this company. We look forward to sharing more about Horizon and its future growth potential with you today with the team. Thanks again for joining us. We'll pass this on.
Ravish, could we have you please request Ravish Rambia, CEO of Horizon Industrial Parks, to take us through the company's journey and the presentation.
Thank you. Good afternoon, ladies and gentlemen. Thanks, Ashish. Thanks, Nitin, for the introduction. Just okay. So just building on where Ashish left effectively, right? So this is Horizon Industrial Parks, India's largest industrial and logistics platform, 100% owned by Blackstone. Post the pre-IPO that we did in December and the IPO that we are coming up with now, which is 100% primary issue, Blackstone was effectively valued down to 75%, but as a part of the IPO, Blackstone is not selling anything. Quick introduction of the platform. So this started about 5 years back, 2020, 2021, right in the middle of COVID. GST was a big enabler for the industrial and warehousing businesses. There are a lot of the large customers of ours wanted to consolidate out of the small, fragmented nature of warehousing and industrial facilities that they've used in the past. That, again, what Ashish said, powered by that and the fact that a large amount of stock in this sector was still continuing to be owned under a very, very fragmented nature meant that the runway for something like this was humongous. And that's what we effectively have delivered in a short span of just 5 years. A 6x growth, building this from 10 million square feet in 2020 to a 61 million square feet platform today. Not only that, this platform is also backed by what we believe is the best-in-class team on the street today. A talent which is unmatched and effectively mimics what a typical developer would have done for us. It is effectively ability to acquire, ability to develop, lease, operate, manage all of these assets in a single integrated structure. Since then, the team has now increased to over 200 members, and as I said, they all come, very high caliber employees, come from industrial warehousing background, real estate background, and come with 2 to 3 decades of experience. And what has all of that done is effectively this. right? A platform which is unmatched today from a geographical diversification perspective, from the product line diversification perspective. Today, again, reminding you all, the platform today is 61 million square feet, which makes us India's largest and the fastest growing industrial and logistics platform. We present in 10 key industrial and logistics markets in the country today, in 9 states. But what underlines all of this is at the stat at the bottom of that table. Nearly 2,300 acres of freehold land bank, which effectively, once fully developed, will carry the 61 million square feet of total stock. 50% of that is built today and nearly 93-94% occupied. The other 50% or 30 million square feet is effectively growth within the fence, for which land, approvals, financing, everything is tied up. So it's just effectively executing what we've done in the past. Right? This is effectively what we offer to our customers, very high-grade industrial and logistics facilities, which are effectively fulfillment centers, distribution hubs used by some of these customers, right? Which are effectively FMCG customers, e-commerce customers, retail customers. But what we also offer is effectively in the same industrial and warehousing park, an ecosystem today which is getting adopted by some of these very deep industrial customers who are effectively using the same real estate, the same infrastructure, to use them to do their assemblies, to do their light manufacturing. So this has effectively diversified us out of 3PL and e-commerce business, which at one stage used to be nearly 100% of our business, to almost 50%. So between the two businesses, we are effectively 50% leased. The third business is our in-city center. But before I go to the in-city center, let me just remind you that even while we diversified significantly over the last 5 years, what we've not compromised is obviously on the build quality, but also the quality of the customers that we've been able to attract over the last 5 years. These are Fortune 500 blue chip companies, 120 of them coming from all the sectors of the economy, right? So this is effectively, when we look at this is pretty much for us a proxy to India's GDP growth. As long as consumption continues to grow, as long as retail continues to grow, there will be e-commerce, FMCG retail companies who need our infrastructure to store, warehouse, use them as distribution facilities. But as India continues its path on rapid industrialization, with all the government policies, framework, on PLI, on Make in India, on Industrial 2.0, these are companies effectively using the same fungible ecosystem to use them to develop. And if you can see that, they're coming from all sectors of the economy. They're coming from EV, they're coming from auto, they're coming from the hardcore manufacturing, from renewables, wind, solar, data center companies who are effectively using their facilities to build data centers, from semiconductors, from defense, and I can keep going on and on. What also, one thing that I alluded to that is not compromised is the build quality, and I think that's reflected in the amount of repeat business that we got from our customers. In a short duration, when we just scaled this up in the last 3 to 4 years, we've already got like a dozen customers who expanded with us, not in one facility, not in 2 facilities, but multiple facilities across India. That's the benefit of scale. Once you scale up to 10 markets, once you scale up to 46 assets, 60 odd million square feet, this is what scale does to you. Today, nearly 40% of the business comes from our existing customers. This is just happy customers who are just giving you repeat business. This is what we've done as execution in the company. As I said, this was set up as a greenfield platform from day one. The team came together, and this is what the best-in-class team has delivered. Nearly 20 million square feet of leasing, nearly 17 million square feet of development in the last 4 to 5 years. And our own throughput has almost gone up 150 to 200%, as you can see there on the screen. Starting out developing and leasing close to 1 million to 2 million square feet. Last year we delivered and leased nearly 5 million square feet of buildings, generating 25 to 30 buildings across India. And we're not stopping there. I think we still believe, like the beginning, we're very confident the scale that we developed, all the quality tuition fees that have been paid over the last 4 or 5 years to come up the learning curve in terms of how to develop a big, large industrial parks Learning from our own Blackstone heritage, as Ashish said, Blackstone owns close to 1 billion square feet of industrial and warehousing assets globally, which is almost 200 times the size of the company. Learning from those companies, what we effectively build is scale, right? Coming to our third business, in city centers, which I alluded to, this only further diversifies our business out from warehousing and industrial. This is effectively bringing similar facilities in a slightly different format. This is more, call it on a 4 to 5 acre land parcels, more from 5 to 10,000 square feet units that will be leased. But this is effectively bringing them very close to the city centers in infill location, where today there is a significant dearth of quality, compliant, grade A industrial and warehousing spaces. What do these things get used for? These things obviously get used for quick commerce, for e-commerce, dark stores, but they are routinely getting used for experiential centers, for service centers, for cloud kitchens, for storages by some of these very, very high precision companies, or R&D labs. Again, you can keep going on and on. Again, to remind you, a large format parks are effectively wholesale leasing. They come in 200 to 300,000 square feet sizes now. This is more in the 5 to 10,000 square feet unit sizes. But the beauty is the rent for something like this can be similar to a suburban office center, which means this will be almost 3 to 4 times the rent of our big format parks. Right, so while this is, and just again reminding on the numbers, this will be total 7 million square feet of a 61 million square feet build out. While it's 11% from a total build out perspective, but once fully completed over the next 24 months, this will add to nearly 25% of our top line and EBITDA. Coming to the key financial metrics, this is what we've delivered as a company. And as I said, a company that has almost grown 6x is pretty much today reflected in your financial numbers. A 27% CAGR in the top line from FY24 to 26. We closed the last financial year at a 765 crore top line and a 605 crores EBITDA, which has grown at a clip of 36% over the last 2 years. Coming to the capital raise, as Nitin said, this is an IPO to raise 2,600 crores of primary capital. That, along with the 1,650 crores that we raised just prior to filing the prospectus in December last year, the total 4,250 crores is 100% primary, is going to use as growth capital to delever the company today and effectively pave the way for the next wave of growth for Horizon. I'll just quickly recap what we discussed. So this is a company in a very, very high growth sector. The total addressable market is only increasing. Institutionalization in this sector has just begun. This pretty much feels like the 2005-2010 vintage of the office segment, where the GCCization helped the commercial office segment reach from negligible to nearly 1 billion square feet stock. This pretty much feels like the GCCization of the industrial and warehousing segment. Right? Here is a company which has almost grown 6-fold in the last 5 years. And that too, as Nitin said, in a very, very compliant manner, not compromising on the quality standard, and effectively bringing the best-in-class infrastructure to this country. Right? And all of this has effectively added to growth. We've grown at a 27% clip in terms of top line, 36% in terms of EBITDA over the last 2 years. We have India's most scaled in-city platform, 7.5 million square feet across 7 assets. This is perhaps one of the most diversified industrial and warehousing companies in India today. Not only diversified geographically, not only diversified across the product line, but also significantly diversified across the kind of customers that we cater to. 120 of them, and all of this, effectively, it is being pioneered or driven by the best-in-class management team. I'll probably pause there and open this up for Q&A.